Welcome back to Yahoo Finance Live, everyone. We're with you from the NASDAQ market site. Let's get you the market commentary of the day. We know the U.S. stock market has been quite resilient in 2023. S&P 500 index up a hefty 15% so far this year. And it seems more strategists are boosting their year-end outlooks to keep up with the rally they never expected. Society General's Manish Kabra raised his year-end target on the index to 4750 from 4300. And Oppenheimer Asset Management's John Stolfus lifting his year-end price target on the S&P 500 to 4900, up from its 4400 December projection. Despite strategists moving their forecasts higher for the year-end, they aren't quite ready to run with the bulls, and there's still a lot of economic uncertainty here. So even as we kind of reassess or see many of the street projections reassess or rejigger their projections here, I think it comes with a few acknowledgments here. Number one, it's been the year of AI. AI has absolutely been lighter fluid for much of the returns that we've seen over the course of this year. There's a larger question, and we were having this conversation towards the end of last week as to whether or not there's an AI rug pull that we could potentially see before year end, where it becomes, and it is already more of a show me story, especially when you've got everybody from NVIDIA to Coca-Cola talking about how they're going to be using generative AI. Now it's more of investors demanding, okay, where is that going to start to show up in some of the margins and some of the financial performance? And I think that AI rug pull starting to get priced in or factored in a little bit more now with specific names.
Yeah, we are starting to see some worry about that. We saw that reflected in the recent earnings results. Some of the companies that weren't able to communicate to their investors, to their shareholders, about how exactly AI is boosting profitability for them, boosting revenue here in a very short time period. Those were some of the companies that had been punished following their results. But something that is a bit encouraging, yes, it was all about AI, all about tech, the rally there in the first half of the year. We have started to see market breadth widen out just a bit. And a number of strategists that we talked to here at Yahoo Finance talk about how that is very encouraging. And don't forget that we had a very successful IPO of ARM last week. We're looking ahead to two more big debuts this week. That could potentially help investor sentiment. So I think more and more strategists are coming around to the fact that, yes, they started the year forecasting a recession, and then ultimately they thought we were going to see a massive pullback in equities. Here we are with just 3 months left in the year, and they're starting to say, hey, maybe it's not going to be that bad. A lot of their baseline case now is for a soft landing. That's also what we're starting to hear, what we have heard from the Fed now for quite some time. So because of that, we're starting to see some of those year-end price targets creep up just a bit, but they're running out of time. They almost have to do it at this point, right?
Yeah. To make sure they're still in the right.
Well, we will see. We got 3 months to go and figure out who, I guess, is going to be right on their calls by the end of the year.